Okay, let's unpack this.
Let's do it.
We've got the full source material on the Infosys Q3 2026 results. That's for the quarter ending December 31st, 2025.
Right.
And our mission today is pretty clear. We need to get past those standard headlines, the big revenue numbers, and really figure out what this tells us.
What it says about the state of play.
Exactly. The state of play for enterprise AI, for digital transformation right now.
And I think the best place to start is actually the context from their own leadership.
The CFO's comment.
Yes. He called it a seasonally weak quarter. And historically, that's true. Client spending usually slows down towards the end of the year.
Budgets are spent, people are on holiday.
Precisely. But then you look at the results, and they had a really strong performance.
Which was driven by what? The big deals.
The big deals. And that contrast week season, strong commitment, that's the whole story right there. That's what we need to dig into.
And when you say big deals, they are genuinely massive. The total contract value, the TCV for large deals was $4.8 billion.
Just for the quarter. It's a huge number.
It is. But here's the number that really matters, the one that tells you about the strategy. 57% of that was net new.
Yeah.
So more than half of that isn't just renewing old contracts. It's new business, new commitment.
It's enterprises signing up for these huge multi-year transformation projects. It says a lot about, their conviction, even in a volatile world.
It's like the fear isn't about spending on tech anymore. It's about choosing the wrong partner to spend it with.
That's it. And that confidence is reflected in the top line, too. Q3 revenues came in at $5,099 million.
So, okay, let's lay out the core financial scorecard, because this is where you need to have a critical eye.
The details matter here.
So, looking at constant currency growth, they're reporting 1.7% year over year.
And a pretty modest 0.6% quarter over quarter.
Right. And year to date, for the 9 months, that CC growth is 2.8%.
Okay, so here's where we have to pause for a second. If you're signing nearly $5 billion in large deals, a 1.7% year-over-year revenue growth feels, well, a little light.
It raises a question, doesn't it? It suggests that the contracts are being signed much faster than the revenue is actually being realized.
Exactly. The sales momentum is way ahead of the current revenue cycle. Bookings are a promise. Revenue is execution. We're seeing a lag.
That's a key insight. Okay, let's pivot to margins. This is where the accounting gets really important.
Yeah, this part is crucial.
The reported IFRS operating margin was 18.4%. But they immediately point to the adjusted operating margin, which actually went up sequentially to 21.2%.
And that gap, that 2.8 percentage point difference, completely changes the story of their operational health. We have to explain that.
We will, absolutely. But before we even get to the why, that adjusted number shows incredible efficiency.
It does, and the cash flow backs that up. Adjusted free cash flow was, what, $965 million for the quarter?
A huge number. But the conversion rate is the really impressive part, 112.8% of their adjusted net profit.
That's just incredibly clean cash management.
And it let them complete their biggest ever share buyback, 18,000 crore, while still paying dividends. So the internal engine is running very, very well.
Yeah, the financial plumbing is solid. And they're still investing in people.
They are. They added 5,043 people to their headcount this quarter.
Which is not an arbitrary number. You don't hire 5,000 people unless you expect to put them to work.
Exactly. It's the investment you have to make to turn that $4.8 billion pipeline into actual deployed revenue.
And that headcount increase is the perfect bridge to the next topic, the AI strategy that's actually driving all these deals.
Okay, so here's where it gets really interesting. The CEO, Salil Parekh, was very clear. He said their market share gains are coming from differentiated value propositions in enterprise AI through Infosys Topaz.
So Topaz is the anchor. It's the core of the strategy. It's clear that clients are starting to see them not just as, an IT outsourcer,
but as an AI partner.
An innovation partner, yeah. Someone to help them move past just pilots and actually unlock real business value. That's a huge psychological shift.
And that kind of strategic shift, it demands a massive internal commitment. They talk about having to reskill, transform, and empower their entire workforce for an AI-augmented world.
Because the tech is only as good as the people who can actually use it.
Right.
And speaking of the tech, they had 2 major launches this quarter that really define their approach. The first one is Infosys Topaz Fabric.
Okay, that sounds like something out of science fiction.
Yeah.
What is Topaz Fabric in, practical terms?
It's described as an agentic services suite, which is a bit of a mouthful.
A little bit.
Let's simplify it. Think of it as a kind of unified nervous system for AI. It's a platform where all the different AI workers, the agents, can live and communicate and operate together.
So it connects the infrastructure, the data, the models, everything into one ecosystem where you can build these custom AI solutions.
Exactly. It makes it all composable. And then the second launch was the Infosys Customer Experience Suite for Salesforce.
Which takes that same idea of agentic AI and makes it immediately practical for anyone using Salesforce.
Precisely. It's about bringing this power into the environments clients are already using every single day. And the great thing is, we don't have to guess how this works. We have real client examples.
Okay, let's get into those. Let's connect the strategy to the outcomes, starting with finance and HR Metro Bank.
Right. They're using Workday solutions to transform their finance operations. And the key here isn't just, installing new software.
It's about what it enables.
Yes. The CFO said it will unify core finance, create self-service tools, and just simplify daily ops. It frees up humans to do analysis, not just data entry.
And we see a similar thing with Telenor Shared Services, modernizing HR with Oracle Fusion Cloud, streamlining processes, improving the employee experience.
Standard but critical modernization plays. But then you get into the vertical industries, and the stakes get much higher.
Like the partnership with the NHS Business Services Authority in the UK.
This is huge. They're delivering the future NHS workforce solution. It's a massive data-driven project to help attract, retain, and support NHS staff.
So this is AI and data being applied to solve a critical societal-level challenge.
Absolutely. Then you have Lufthansa Systems building an AI-first global capability center. The focus there is on aviation safety and operational efficiency.
When AI is touching aviation safety, you know it's being taken seriously.
And then there's the really complex stuff like Project Elevate with Fresenius, a massive global business transformation using SAP S/4HANA.
These are the foundational projects that basically rewire a company's entire nervous system.
They are, but the most, I think, forward-looking examples are the ones they explicitly label agentic AI in action.
This is where Topaz is doing work that humans were doing just last year.
Right. Take VTT. They implemented what they call an Agent Force SDR agent, a sales development rep.
Why?
Because their human sales team was spending way too much time on, and I'm quoting, low-value tasks like lead grooming.
So the AI agent does what exactly?
It automates the whole lead process. It writes contextual emails, does the initial qualification, even sets up the meetings.
Wow, so that's not just making things more efficient. That's a fundamental restructuring of the sales role. The AI handles the repetitive stuff.
And the humans focus on the high-value relationships and closing the deal.
And it's not just in sales. Nu Skin is using Topaz Fabric for something called Agent Assist.
Yeah, this is for their IT operations. The goal is to massively increase automation for application and infrastructure support.
So the AI agents are diagnosing and even fixing IT problems themselves.
That's the idea. Proactively, autonomously. Boosting resilience, improving the user experience. The AI is starting to maintain the infrastructure itself.
Okay, so this level of operational health explains that strong adjusted operating margin, the 21.2%.
It does.
But we have to bridge that gap now.
Yeah.
Why was the reported margin only 18.4%? What was that $143 million adjustment?
And this is so important for anyone listening to understand, because without this context, the reported results look soft and you draw the wrong conclusion.
So what was it? It wasn't an operational issue.
No, not at all. The provision was required because of new regulations, the Government of India labor codes, which were notified on November 21st, 2025.
So this was a mandatory one-time accounting change driven by new legislation.
Correct. The new codes consolidated a bunch of old laws, and Infosys had to book a provision to cover an increase in employee benefits, specifically for gratuity and leave liability. It's a compliance cost, not a performance issue.
That clarity is everything. So the underlying operational profitability of 21.2% was just masked by a regulatory cleanup.
Exactly. And you can see their confidence because it didn't change their forward-looking guidance.
Right. They kept the full-year FY26 guidance. Revenue growth at 3.0 to 3.5% in constant currency.
And the operating margin guidance stayed firm at 20 to 22%, excluding that one-time adjustment. They're clearly not shaken by it.
What's really fascinating to me is how cohesive this whole strategy feels. It's not just the financials. It's backed up by all this industry validation.
It is. They have this digital navigation framework, and at the center of it is the AI-first enterprise.
And it's surrounded by 5 themes: product plus key, design plus C, data plus E, talent plus A, and engineering plus A.
So it's a pentagon of capability. It shows they understand you can't just have a great AI product.
You need clean data, the right engineering pipelines, and crucially, the talent to manage it all.
Exactly. It's a holistic view. And that's why they're getting recognized everywhere. They're a leader in the Forrester Way for AI technical services.
And in Everest Group's data analytics services, so the foundation is strong.
But it's not just general AI. They're also leaders in specific, deep industry domains.
Like banking IT, property and casualty insurance IT.
And across the whole supply chain ecosystem, Blue Yonder, SAP, Oracle, they're showing they can bring cutting-edge AI into these really complex, mission-critical systems.
And on the Talent Plus side, they also received a nod as a silver employer in the India Workplace Equality Index for supporting the LGBTQIA+ community.
Which underscores a whole point. Success in this new world, this AI-augmented world, isn't just about the tech. It's about having a modern, inclusive workforce that's ready to drive the change.
So after all that, what does this all mean for you, for someone navigating this landscape?
I think it means we're seeing a company successfully turn that strategic buzz, the AI-first enterprise, into hard financial results. The robust cash flow, the massive deal wins.
That $4.8 billion in TCV proves the market is ready to spend big on AI transformation right now.
But they're being very specific about who they spend it with. They want an integrated partner, which is clearly what the Topaz ecosystem is trying to be.
The time for just talking about AI's potential is clearly over. We are now deep in the implementation age.
With things like Topaz Fabric and Agentforce already automating core business tasks.
Which brings us to the final thought, the big question this leaves you with. The source material keeps mentioning the need to reskill the entire workforce for this AI-augmented world. So the question is this: how quickly must traditional companies and the people who work in them adapt to systems like these? Systems that are already proving they can automate tasks that, until very recently, were the entry point for a career.
It's a huge question. This transformation isn't just about buying new software. It's about fundamentally rethinking the structure of human work itself.